This is Cashflow Ninja, episode 299 with Kevin Nichols.
Producers and creators are the sources of all value on the planet. MC Laubscher, the host of the top-rated business and investing podcast Cashflow Ninja, is on a mission with Producers Wealth to help producers create, protect, and multiply their wealth outside of Wall Street in any economy by creating systems and processes that help them increase their production, provides them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com. That's yourownbankingsystem.com.
Welcome to the Cashflow Ninja, the podcast sharing how to create income streams and manage, multiply, and protect your wealth in the new economy. Here is your host inside the dojo, MC Laubscher.
Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show, we're going to dive a little bit deeper into life settlement investments. My guest in this episode is Kevin Nichols. Kevin is the managing partner at Penumbra Solutions. Penumbra Funds invest in hundreds of senior life settlement insurance policies with a target yield in the low double digits, no market risks, no premium calls, professional management, and funds locked up safely in escrow. This might be the best investment you have never heard of. A life settlement is the sale of an existing life insurance policy to a third party for more than its cash surrender value, but less than its net death benefit. There are a number of reasons that policy owners may choose to sell their life insurance policies. I created a page with lots of resources and information about life settlements. You can access that at cashflowninja.com/life settlements and also at cashflowninja.com/Penumbra. My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for high yield returns from multifamily apartments, ATM machines, and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their multifamily, ATM, and self-storage syndications, please visit cashflowninja.com/Real Asset Investor. Kevin, welcome back to the show.
Hey, great. Thank you. Great to be with you, MC.
Now, for my listeners that are not familiar with Kevin Nichols and Penumbra Solutions and did not catch the first episode, which, by the way, if you haven't, you should definitely go back and listen to that episode on life settlements. Kevin, can you please share a little bit with my listeners more about you and Penumbra Solutions?
Sure. We used to be financial advisors. We really don't do any financial advising any longer. We don't really have time. We developed an investment about 9 years ago, where we buy life settlements. It's an investment that my partner and I were both individually investing in, and we decided to pool our investments with some family members and create our own little pool or a little fund. And so we started that back 2009. We had the idea. It took us a long time to get the documentation written up properly, get the structure set up, and then we opened it up in 2010 to our family members and some of our friends and that are clients that could qualify for it. And the next thing we knew, it's kind of it just grew legs and has picked up speed, and really that's really now all we do. We work with financial advisors around the country who have clients who are suitable for this investment, and it's the underlying asset are life insurance policies from people who no longer want them or need them, and they raise their hand to sell them, and we evaluate them for purchase. And when the people pass, we collect the death benefit. It's a win-win situation for everybody.
Now, some of my listeners might not be familiar with life settlements or have never heard them. This is not something that there's a lot of knowledge about in the public space, and institutions has been investing in them for quite some time. Can you share a little bit more exactly what it is, how it works, and what the process around it involves?
Sure. Say, for example, you have an 85-year-old who has a life insurance policy that's, say it's a $5 million policy. Maybe there's a couple $100,000 of cash value in it. Perhaps there's no cash value. Perhaps it's a term policy that we can convert to universal life. When they get older, the premium expense becomes very onerous on the family. And so they decide, maybe it's a good idea to let this go, stop making the premium payments. Perhaps they've got some cash value and the insurance company will give them their cash value for the policy. But someone will tell them, you may be able to sell the policy. You're 85 years old. You probably got a 10-year life expectancy. Maybe we can get some money for the policy. And so they will approach us. Usually we don't deal directly with the insured. So we're dealing with an agent or an attorney or someone of that nature. And they will come to us and say, are you interested in buying the policy? So we'll evaluate the policy, the age, the company, the strength of the company, the death benefit, any cash value, the premium expense, all of that is taken into consideration. And then we make an offer on the policy. If they accept the offer, then we use an escrow company to make sure that all the documentation is done. We get in contact with the insurance company to make sure that they're aware of it. We contact we have the beneficiaries sign off so that it's not a surprise to them. And then we then pick up the premium payments on the policy. And when the insured passes, we collect the death benefit. Now, sometimes we actually share the death benefit with the family, and that can be negotiated into the transaction as well. The thing that's important to think about or to remember is when someone comes to us, they raise their hand. We don't ever approach anybody. They raise their hand saying, I'm interested in selling. Furthermore, they always, 100% of the time, get more from us than they would from their insurance company. This is an investment that has been around since 1911. And the original case was called Grigsby versus Russell, where a surgeon was going to perform a surgery on a patient, and the patient didn't have any money to pay. So he said, I have this life insurance policy, and I will give you this in exchange. And so the surgeon accepted it. And when the patient passed years later, the insurance company tried to deny the claim. And so the case went all the way to the Supreme Court. And like I said, the case is Grigsby versus Russell. And it was adjudicated by the Supreme Court. And it was adjudicated by the opinion was written by none other than Oliver Wendell Holmes, and essentially said that once a life insurance policy has passed the contestability period, it is private property and people are able to do with it as they please. And that case law has held through challenges all the way to today. So, who does it today? It's historically been reserved for institutions, for very, very wealthy people, endowments, trusts, things of that nature. Warren Buffett is a very large investor in life settlements. Bill Gates has got positions in life settlements. In fact, today, this is interesting, the largest purchaser of life settlements is AIG, which is funny if you think about it. They are an insurance company, and yet they've got a sub company, one of their subsidiaries that is actually buys life settlements from other insurance companies. So it's something where you may not have heard of it, but it's been around a long time, and most people have not had access to it until now.
Yeah, this is definitely part of the Wall Street, big banks, financial institutions, life insurance company playbook And endowments, as you mentioned, actually a listener of the show had mentioned, he discussed hearing about life settlements on the show, and he had a family member that was actually working for a university endowment that was familiar with it because they invested in it, right? So these investments are a little bit kind of an underground secret that these guys invest in, and these institutional investors use. I just wanted to use an example for the listeners as well, just to give a quick example of how this is such a win-win transaction for all the parties involved, because somehow it's still smeared by a lot of financial professionals. For instance, if there's someone that only has a certain amount of time to live, maybe they need the money either to save assets or preserve assets for the family, or to live their life out in dignity, or just in comfort. And maybe, around the time of the last financial crisis, they lost all of their savings in the stock market. They had zero equity in their house. But guess what? They had an asset that they didn't know about. It was called the life insurance policy. And let's just say, using the amount that you used, Kevin, they had $5 million of death benefit in there. Maybe they had $100,000 or $200,000 in surrender or cash value. Now, all of a sudden, there's a life settlement company that would give them probably $1 million for that, almost 4 to 5 times more than what they had in their surrender value. Mm-hmm. So now, all of a sudden, from being broke and really, quite frankly, for excuse my French, but screwed, all of a sudden now they have some money to live out, preserve some assets for the family, to live out their life out with dignity. And then on the other side, obviously the life insurance settlement company stand to make a profit from this. So I just wanted to clarify that too, that there is a win-win for everybody that's involved with this, whether it's the life settlement company, whether it's the investors from them, and whether it's the seller of them. And I also just wanted to touch on some of the benefits of diversification. We just had this enormous drop yesterday in the market. I slept like a baby last night because I am playing in the Wall Street casino, right? This is completely out of any markets, out of any economy. It doesn't matter what banter's going on with what world leader out there. This doesn't affect this investment. And Kevin, there's a lot of guarantees built into this as well, right?
It's very true. The beautiful thing about the insurance industry in America, first of all, since 1845, no B+ or better rated American life insurance company has ever failed to pay on a death benefit or an annuity claim. Now, we deal primarily with A or better rated companies. So it's good to know that my retirement is guaranteed by the New York Lifes, the Mass Mutuals, the principal insurance companies of America. Now, in addition to that, all of these insurance companies in this country are members of what's known as the legal reserve system, and most people have never heard of that. And the reason that they've never heard of it is very simple. If you were to invest money, or if you were to put money in a bank today, one of the reasons that you do that is because you've got the good faith and credit of the United States government, for what it's worth. That's a whole different conversation, of course. But essentially, you have the FDIC insurance. Now, how many times has FDIC insurance come into play in the last even 10 years, since 2008? And the answer is hundreds of times. Now, you've got the same type of system that's in place for the insurance business. How many times has that been invoked or come into play over its lifetime? And the answer is none, never, because American insurance companies are the strongest financial institutions in the world. So we don't have to worry about not getting paid. That's one of the beautiful things about this investment is not only is your investment guaranteed by the written guarantee of an American life insurance company, your growth is actually guaranteed. So that's another very different aspect or point of this investment. And when people ask their advisor, what do you know about this? You're asking somebody, if you ask your car mechanic, how do I raise cattle? It would be pretty stupid. It's the same thing. You're asking somebody, somebody you may call your fidelity advisor thinking he's an unbiased financial advisor, which most likely he's not. He's, quite frankly, he's a salesman wearing better suits. And you ask him this, and he's going to try and find anything he can going back 20, 30, 40 years of any negative aspect of this investment. But in truth, when you move your money from him, he's going to take a cut in pay. So he's got a dog in this fight. It's very much sour grapes. And we have many steps that are taken to ensure that investors never lose their money. We don't ever touch their money. We take all kinds of steps to make sure that their investment is safe.
You're listening to Kevin Nichols on the Cashflow Ninja podcast. We'll be right back after a word from our sponsor.
MC Laubscher is the host of the top-rated business and investing podcast, Cashflow Ninja, and also the president of Producers Wealth. Producers Wealth assists people in creating, protecting, and perpetually multiplying wealth in any economy through creating processes that help them increase their production, provide them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
You're listening to Kevin Nichols on the Cashflow Ninja podcast, and now back to our interview. Yeah, so there's a couple of sayings that are so cliché, and everyone's heard these at cocktail parties. And the first one is, the Warren Buffett investing rule, right? Don't lose money. Rule number one of investing: don't lose any money. Right. Rule number two: follow rule number one. And the other thing that people keep saying over and over is, you make your money when you buy. You make your money when you buy. There's an asset clause, if you look at it, where the principal is guaranteed in this. And you actually buy your equity in this investment. So you literally make your money when you buy on this. There are additional factors and variables in this. We'll touch on that in a second. But that's my point that I wanted to drive home is this is why the big boys get to play in this game and utilize this vehicle. And a lot of people are not familiar that this is open now also to accredited investors and no longer just to institutional players and the big boys. Kevin, now let's touch on some of the risks. You had mentioned that you guys don't touch the money, so we know that you can't run off with the money, which might be a question that someone have. Let's hit some of the other risks associated with it, institutional time, which ties into longevity and some of the fees. And let's talk a little bit more about that.
Sure. Longevity is probably the primary risk in this. In that, if people live longer than than we think they're going to, will the policy still be profitable? And that is a risk that needs to be managed on our end. We buy policies typically from people, let's say between the ages of 88 and 92. Now, most life settlement companies or any life settlement that you are looking to purchase, you would get 2 medically underwritten life expectancy estimates on that individual, and you would make your buying decision based upon that. But that's a life expectancy estimate plays a very big part of the purchase of a policy, especially on somebody who's, say, 78 to 82, because they could live 20 years, and most policies are not going to be profitable after 20 years. However, when you focus on older people, all right, when you're focusing on people between 88 and 92, and by the way, across the last 7 funds that we closed, the average age is over 90. It's about 90.1 years old. In truth, how long will people live? You're not. if you've got an average age of 90 years old, you have a pretty good idea that the majority of your policies, the large majority, will have matured by the next 6-7 years. If you have a straggler that lives beyond that, you're at that point in time, you're playing with house money and you can afford to wait. And so it's not a problem. So the way that we mitigate the longevity risk is by focusing on older policies. Now, we do have to pay more for older policies. And of course, the premium expense is higher on older policies. And the way that we manage that is when we raise money, whatever we raise, each fund can be up to $25 million. Now, say we have a $20 million fund, we're going to hold back 40 to 50% of whatever we raise and not deploy it, not buy policies. We're going to hold back in that case, anywhere from $8 to $10 million in cash. And that's to cover the premiums for the first 2 years. And the reason we do that is, obviously our primary function is to protect the assets of the fund, which are the life insurance policies. And the way we protect them is we make sure that we make the premium payments on time. We don't take any debt when we do this. And so we have no carrying costs, we have no interest expense, and we don't have the bank for a partner in this. So we have to reserve money up front for those premiums. And it would be an entirely different fund if we invested, say, 90% of the money and held back 10 and then just borrowed on a line of credit. But again, that's not what we do. We manage it very conservatively, and we don't have any debt in how we do this. And so we hold back cash initially and continuously for about the first 5 years to make sure we've got enough money to cover the next 2 years of premium payments. And then everything is released directly into the investor's account from the escrow holder. We use a third-party escrow. We use the Bank of Utah. We have a custodial account with them. They manage the money. We don't even have signatory authority on the account. So all the maturities come directly to them. They then distribute it directly to they either hold it for future premiums, or they'll distribute it directly to the investors into their accounts. We don't touch it. So that's one of the ways that we try and mitigate the risk or any chance of anybody being concerned that we can touch their money. It's hard to get in trouble when you can't touch anybody's money.
Right. Let's talk on the fees part too. And one thing I just wanted to touch on as well is that you guys eat your own cooking.
Absolutely.
So you guys invest in every single fund that you have.
Yes.
So that says one thing right there. But let's hit on the fee side, because I'm sure that's a question that listeners might have as well.
Sure. Well, it's funny. When we first set this up, our first investor was my dad. And, he continues to invest. Now, there's no way he's going to let me have high fees on a fund like this. And I never want to hear that phone call from him, asking about my fees. Right. But like you said, we do eat our own cooking. We invest in every single fund. In fact, my partner and I are probably the largest investors across all 7 current funds. Now, in terms of fees, this is set up as a private equity fund. Most private equity funds are set up on what is called a 2 and 20 basis. And that means 2%, they'll take 2% of the money every year as a management fee. And then they're entitled to 20% of the growth on the back end. And that's going to be average. We set it up completely differently when we set this up. We have expenses up front to set up the organization, the offering. They're called organizational and offering expenses. And those are going to be paying Bank of Utah for their custodial and escrow services, the legal, the accounting, the printing, what have you up front. So whenever an investor invests with us, there's a 1.5% O&O fee that comes off the top. So if they put in $100,000, $98,500 goes directly into purchasing the asset. $1,500 comes to us to reimburse us for those expenses. That is a one-time fee. That's it up front. Okay. Now we do have a back end that we get a management fee, and that's 2.5% of whatever matures. Again, that's a one-time fee. So we don't get paid our management fee until clients get paid. So the better we do, the better everybody does. And we have to live by those very same rules. So because, like I said, we're big investors in this as well. And so we can't legally treat ourselves any different than anybody else. And so, it works beautifully that way.
And you guys have had an impeccable track record with all of the funds that you're doing through the years. Can you guys talk? Can you share a little bit just some of the successes that you guys have had?
We're proud of that. We've never had a client lose a penny. Never had one. We've never had a policy not pay. We've never had a policy pay less than what we thought. We've never been sued by an investor, by an insured, by an insurance company for any of these. So I would say that we're very proud of that. And the reason for this is because we do what we say we're going to do. We set expectations for the investor, what they can expect, and we live by that. Probably the only one of the biggest risks in this, we probably walk away from more business than people would ever realize. In other words, we tell people, even though the average age of the insureds in our funds is 90 years old, and it's reasonable to expect that every one of these policies will have matured in 7 to 8 years. We tell people this: if you are going to need the money inside the next 10 years, do not invest it with us. Put it somewhere else. Work with your financial advisor and come up with a better distribution plan or a better income plan, because we don't want people who are going to be needing the money inside of 10 years. Now, the truth is you will be getting money inside of 10 years. You'll probably start to see money go directly into your account after year 5 or 6. After we've kind of gone past that tipping point where we've had policies mature, which puts money into the premium reserve account, and every time you have a policy mature, that's a premium that you no longer have to service. And so you reach the tipping point where now everything can be distributed on a quarterly basis. But nevertheless, we still tell people, if you're going to need the money for certain inside the next 10 years, don't invest it. Work with your advisor to come up with an income plan for that.
Absolutely. This is not a very liquid investment. This is a growth play, not a cash flow play per se. Kevin, let's talk about the tax treatment, because that might be a question that some of our listeners will have as well, and how this is treated, and any other information that you can share around the tax implications of this investment.
Well, probably 85% of the investors in any of our funds use qualified money. By that, I mean they use Roth IRAs, rollover 401ks, self-directed 401ks, things like that. So 80 to 85% on average is qualified money, which means that it's going to be taxed as income to you as you pull it out. Now, for the other 15 to 20% of the investors who are cash investors, we treat it as income because that's what the IRS has said. That although there's a significant argument that one could state that it should be treated as capital gains. Again, we try and be more conservative and not, that's not a hill that we want to die on, and so we don't fight that battle. So it will be reported on a K-1 to the investor as income. So that's the tax treatment in terms of one other quick point. We've probably had, as it relates to liquidity, MC, we've probably had over the years, maybe I would say 7 to 8 clients who had said, hey, I need to get either all or some of my money out. We've had a disaster here. What can we do? And we've always been able to get them out. We either will have another investor who will want to buy their position, or we will buy their position, or one of the other funds will buy their position out. So it's not that if you invest, you can't get out. It's not like that. We don't lock your money up. But it just creates somewhat of a burden. It takes time for us to get that done.
Gotcha. One point that you made there is that there is a lot of qualified money in this. So if there's an IRA or a self-directed IRA or a 401k, solo 401k, any of those sitting around, this is money that can be used for this investment. Kevin, where can my listeners reach out to you, request more information? And you guys have put together a fabulous presentation. Where can listeners access this presentation? Sure.
They can go to www.thpenumbraplan.com. That's THEPENUMBRA P as in Paul, E, N as in Nancy, U, M as in Mary, BRA, plan.com. They need to go there. They'll put their information in where it says, how'd you hear about me? Just put, you can put Cashflow Ninja or put your name, whatever they want. And then it'll ask for their email address. We don't hound people. And then it'll ask them to enter a password. And the password is Penumbra, all lowercase, PENUMBRA. And then they'll be able to access the video.
Great. And I've put together a page specifically for this investment, life settlements investments. You can access that at cashflowninja.com/Penumbra. And what you'll find on that page is the 2 episodes that Kevin and I discussed the specific investment. I also did a separate episode on life settlement investments and just what I came across in my research. That's on there. And then all the other information to access the video presentation that Kevin has will be on that page.
There's also a very good book, MC. And if your people are interested in it, if they'll contact me, I'll send them an electronic copy for free. We didn't write the book. It was a third party. It's called $1 Billion Blueprint by Stephen Gardner. We'll give it away. Again, we didn't write it, but it is a very good resource and gives an unbiased view from a third party. And then if they want to call me, they can reach me here. We're in Southlake, Texas. We're about 5 miles west of the Dallas-Fort Worth Airport in North Texas. The phone number here is area code 817-479-9770. Again, 817-479-9770. They can also reach me at kevin@penumbrasolutions.com.
Perfect. Yeah, no, I really enjoyed that book as well that you just spoke about, the $1 Billion Blueprint. I've read it a couple of times during my research for this particular investment and would highly recommend it. I'll put a link to that on the page as well. So you'll have all of that information. Thank you so much again for coming on the show. This has been a blast having you on again, and thank you for providing so much value for my listeners.
Oh, it's been my pleasure again. My privilege to be with you, MC. Thanks again for providing the format.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the $1 Billion Blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you for joining me again on the Cashflow Ninja. Thank you for all your support. You rock. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com or text Cashflow Ninja to 44222. I'm also posting daily videos on Facebook and YouTube and will live stream weekly starting May 2018. To make sure you don't miss any of the live streams, please like and subscribe to my Facebook and YouTube platforms. I'm also dropping content on Instagram daily. Be sure to follow us on Instagram to get in on the action. I want to thank you for spending your most precious resource with me today, your time. That's our show for today. Until next time, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.